This accounting mini lecture covers the financing section of the statement of cash flows. Okay. Now, to prepare the financing section of the statement of cash flows, we are going to use a basic three-step procedure. Okay. We're going to look for changes in financing related accounts. We're going to explain these changes and then determine how it impacts our cash flow. Okay. Now, what we see here is a comparative balance sheet. Now, remember, in the financing section, we are really concerned with changes in long-term debt and equity. Okay. So when we look at this basic comparative balance sheet, here are some things that jump out. Okay. Long-term notes payable, we see that it changed year over year. It increased from $64,000 to $90,000. When we look at common stock under the equity section, we see that our common stock account also changed. In addition, retained earnings increased. So this is all information that is going to be needed as we prepare the financing section. Now, at this point, we're going to dig into those transactions just a little bit more to see exactly what occurred and what caused those changes. In this case, it looks like we retired a note payable, okay? You can see that we retired the note. It had a carrying value of $34,000. We retired it for $18,000 in cash and reported a $16,000 gain. But we see the important thing here is we're really looking for the cash impact. And in this case, the cash impact is the $18,000. Looks like we also purchased some plant assets using a note payable and paying $10,000 in cash. Additionally, now let's look at the equity section. We notice that common stock changed. Okay, in this case, we issued stock. The cash impact was an increase of $15,000. We also paid dividends during the period. Remember, we noted a change in retained earnings. Now, the other portion of the change in retained earnings would likely have been attributable to net income, but we need to know the dividend portion because the dividend portion is what's going to be reported in the financing section. And in this case, we paid dividends, which had a negative impact on our cash of $14,000. So now let's look at how this would be reported on the face of the statement of cash flows. And we see here at the bottom of this particular statement of cash flows, we see the cash flows from financing activities. We're going to report the cash received from the stock issuance of $15,000. We're going to report the cash paid to retire the notes of $18,000. Of course, that has a negative impact because that's cash paid. The cash paid for dividends will also have a negative impact. So our net cash used in financing activities is $17,000, and we call it used in financing activities because it is a total negative number. Basically, we had a negative cash flow related to financing activities. Thank you for watching this video on the statement of cash flows and financing activities.